What if everything you thought you knew about the global economy just changed overnight? Because over one single weekend, that is exactly what happened. The entire global market landscape was violently redrawn.
In just 48 hours, this is how much value vanished from global stock markets. $3.2 trillion, just gone. So the question is, what could possibly trigger a financial earthquake of this magnitude? Let's break it down.
This wasn't a slow burn. It wasn't a gradual decline. This was a sudden, coordinated global collapse. A shockwave that hit every major market pretty much all at once.
And this wasn't some localized tremor, it was a global contagion. As markets opened, the sell-off just went viral. South Korea's Kospi index hemorrhaged 8%. Japan's Nikkei plunged 6%. By the time Europe even woke up, the damage was done, with major indices down nearly 5%. It was a brutal, synchronized freefall.
Now, this wasn't just investors taking a little profit off the table. Oh no, this was genuine, primal fear. The VIX, which is basically Wall Street's fear index, completely erupted, spiking over 20%. That's the market literally screaming panic. So what caused all this? Well, the trigger for all this chaos can be traced back to one single, absolutely critical 21-mile-wide stretch of water. This is the Strait of Hormuz. You can think of it as the planet's most critical artery for oil. Nearly a third of all seaborne oil and a massive chunk of natural gas has to navigate this narrow choke point. So when this waterway is threatened, believe me, the entire global economy holds its breath.
The reaction in the energy markets was instantaneous and violent. WTI crude oil shot up almost 9% in a single day. Brent crude blew right past $81 a barrel. Now, these aren't just market fluctuations. These are tectonic shifts that can dictate inflation and central bank policy, like overnight.
Now, as shocking as this spike is, it's actually not unprecedented. History gives us a pretty clear playbook here. Geopolitical conflict in this region leads to a direct, predictable, and immediate surge in oil prices. The market is simply following a very well-worn script of fear. But this is where the story takes a really fascinating turn. Because faced with this crisis, investors didn't just panic, they started breaking the fundamental rules of investing. This quote from State Street's chief investment strategist just captures the mood perfectly. Panic really narrows the focus. All of a sudden, the entire complex world of finance just boiled down to two things: oil and the US dollar. The normal playbook was just thrown right out the window. Investors weren't just selling stocks, they were liquidating everything. Even traditional safe havens like government bonds and gold were being dumped. In a true panic, the only thing that matters is liquidity, cold hard cash.
There's a technical term for this, a VAR, or value at risk shock. It's when selling becomes so contagious that the protections you built into your portfolio just fail. It's the financial equivalent of a cascading system failure.
And the data, well, it confirms this dash for cash. In just a matter of days, nearly $48 billion poured into money market funds. Investors were fleeing every other asset class for the perceived safety of liquidity. But in every crisis, there are opportunities. A war economy doesn't sink all boats equally. What it does is create a stark divide, producing very clear winners and very clear losers.
So on one side, you have the losers. Airlines and chemical companies, they're getting crushed by higher fuel costs. Consumer brands are getting hit by falling confidence. But on the other side, you have the winners, defense contractors, major energy producers, and of course, the safe haven US dollar.
And if we zoom in, you can see this playing out at the company level. US defense giants like Northrop Grumman and Lockheed Martin are soaring. Energy majors like Exxon and Chevron are posting really strong gains. And the ripple effect is global, boosting firms like India's Paras Defense. And check this out. While gold saw an initial dip in that mad rush for cash, major banks like JP Morgan are now forecasting a surge to over $6,000 an ounce.
Okay, so where do we go from here? Right now, experts see the global economy standing at this critical crossroads with two very, very different paths ahead.
On one path, you have a quick de-escalation. The conflict resolves in a few weeks, the Strait of Hormuz reopens, oil prices fall back. In that scenario, markets could see a huge relief rally. But on the other path, a prolonged, grinding conflict. The war drags on for months, shipping stays disrupted, oil stays high, and the global economy starts staring into the abyss of a potential recession. The events of the next few weeks are going to determine everything. The critical question for every single investor, and really for the whole global economy, is this:
Which of these two futures is the market pricing in right now? The answer is going to define the year ahead. We're going to be tracking every development as this story unfolds. To make sure you don't miss our next breakdown, go ahead and subscribe now.
And if you found this analysis valuable, liking this explainer really helps us bring you more deep dives into the forces shaping our world. Thanks for watching.